The Reserve Bank has delivered on expectations and cut the official cash rate by 50 basis points. It's now the lowest it's been in 2 years at 3.75%. Banks, including ANZ, have responded immediately by slashing some home loan rates. And as Zane Small reports, there could be further cuts to come.
Pooja and Richard stand proudly in front of their first home together in West Auckland.
We've got about 6 to 7 fruit trees.
The pair picked up the 3-bedroom property for $910,000, a deal secured by their estate agent Charlotte Powdrill.
I feel like we got a good deal.
Yeah.
It is, after all, a buyer's market. The number of properties available for sale is 19% higher than a year ago, but that could change as interest rates continue to drop from their post-pandemic peak.
5.92 is where we're sitting at.
When the couple refixes a year from now, it's likely to be lower. The official cash rate was today cut for the 4th time in a row, bringing the benchmark lending rate to 3.75%. And there could be more to come.
If economic conditions continue to evolve as projected, the committee has scope to lower the OCR further during 2025.
Anything that kind of comes down is a bonus for us, really. Yeah.
Buyers at the moment are sitting down, crunching the numbers and working out that potentially their mortgage repayments are actually going to be quite affordable in comparison to rent.
A reduction to the official cash rate is also music to the ears for retailers because slower borrowing costs means more disposable cash. The latest card transaction data shows that while retailers saw a boost over the summer holidays, consumers are continuing to be careful with their spending, resulting in total retail sales that were down 0.5% in January compared to a year ago. The Reserve Bank is charged with keeping price inflation under control, and at 2.2% it's on target. But growth is desperately needed after the New Zealand economy experienced a larger contraction than previously thought during the middle of 2024, and there is significant spare capacity in the economy.
Lower interest rates will encourage spending, although, of course, elevated global economic uncertainty is expected to weigh on business investment decisions.
The central bank's rate cut decision was also attributed to lower government consumption, which helped to slow domestic demand.
This makes a big difference. It puts more money in their back pockets for homeowners, for small business owners, and has flow-on effects across the economies.
But recession has led to rising unemployment.
We know it's still tough. We know that New Zealanders are still wrestling with the cost of living. But, this is a positive sign.
It is for this couple, who are already thinking about what they could buy with the extra cash when they next refix.
Oh, maybe a holiday. I think the stress of moving and everything, we probably could do it a couple of days away, which would be nice.
Holiday, second car, depends.
Yeah.
Nice, love that. For now, a box of chocolates to celebrate the purchase of their first home.
Well, Zane is with me now. Kia ora, Zane. So more rate cuts are signalled for the year ahead.
That's right. The Reserve Bank Governor suggested that with inflation more or less under control, there is room for interest rate cuts to help grow the economy. He signalled another 2 cuts by July, landing on 3% by the end of the year. What will be interesting looking ahead is how mortgage holders approach refixing. I spoke to property economist Calvin Davidson. He told me new borrowers have been favouring either short-term or floating fixed rates, believing there's a lower rate around the corner. But now that we're heading towards a more neutral rate of 3%, he said borrowers might once again start thinking longer term.